Okay, so you're thinking about buying your first home here in the North Dallas, Texas area. And before you start endlessly scrolling through Zillow and other websites, stop what you're doing, because in this video, I'm going to break down the fees, what it's going to cost, the process, and everything in between. A lot of people think they actually have to save up 20% down payment to purchase a home, but that's not necessarily true. If you're a veteran, you can purchase with zero down, and there are some homes that you can purchase with a USDA loan that is also zero down. Now, that's going to be a very small percentage, so let's dive into the numbers of what you need to actually purchase a property. You can actually purchase a home for as little as 3% down, and according to this chart, on a $400,000 home, you can get in for as little as $12,000. So think about this. You can actually become a homeowner for less than what it would cost you to actually own a not very good used car. But let's look at this in regards to your mortgage and how the payments play out. So for as little as $12,000, you can buy a home, but that monthly payment might be a little bit tight for you. So let's change the variables a little bit, and let me show you the difference by adding a larger down payment. In looking at this quick mortgage calculator, a $400,000 property with 3% down with a $12,000 down payment in the Frisco, Texas area is going to run you about $2,557 a month. Now, there are additional fees because you're putting in down less than 20%. There's PMI of $317, insurance roughly $80 a month, and then your taxes around $300 a month. So for as little as $12,000, you can buy a home, but that monthly payment might be a little bit tight for you. So let's change the variables a little bit, and let me show you the difference by adding a larger down payment. So let's change this 3% to a 5% down payment, and let's see what happens there. As you can see, your payments don't change a whole lot, and you're coming up with an additional $8,000. That's because your mortgage insurance is still in place. Now, let me show what happens when you put 20% down. By putting 20% down, you have now gotten rid of all of your mortgage insurance, and your total payment drops down to $2,507 a month. Now, let's talk a little bit more about that mortgage insurance, or PMI. When you purchase a home with a down payment of anything less than 20%, the bank is going to put an insurance policy on that loan to insure them of the risk that you default. And that premium is passed on to you and part of your mortgage payment. So that's why when I'm showing you numbers and you see anything less than 20%, the mortgage insurance is added to your monthly payment. Now, the good news is once you have 20% equity, you do have the right to go to the bank and ask them to remove that mortgage insurance, which I advise most of my clients to do. And when they do that, it saves them a few $100s a month. As a first-time home buyer, you may also qualify for down payment assistance, and this is a fantastic program for those that qualify. Down payment assistance is a special program that when you qualify, they will actually give you your down payment money. It normally comes in the form of a grant, and a lot of times it doesn't have to be paid back as long as you follow the rules and you've been in the property for a certain period of time. Okay, so now you know how much money you need as a down payment, and you have a decent idea of what your monthly mortgage payment is going to be with my earlier example. Now it's time as a first-time home buyer to get a pre-approval letter. And in order to get a pre-approval letter, you're going to need to reach out to a local bank or a mortgage lender, and they're going to ask you for a ton of information. They're going to ask for a lot of documentation, and honestly, it really feels like a pain in the butt. But what they do is they then take all that information and they qualify you according to the ratios of how much the bank is going to loan you, which is a good thing because now you know the maximum of what the bank will lend you when you go to purchase a home. Okay, so now you have your pre-approval, and now it's time to pick a realtor to work with. Now, contrary to what some people might think is that, hey, I can scroll through Zillow or other websites, find a home, go visit open house, and just have anyone write an offer. I will tell you from my experience that most buyers that do that aren't very happy at the end of their transaction. The key is finding a realtor that understands what your wants and needs are, and is going to be there the entire transaction. You want the realtor to be there to answer questions for you and to communicate with you the way you like to be communicated with, via text, via email, or phone calls, and as frequently as you want that realtor to communicate with you. Some people also think if I work with the realtor that's all over the billboards all over town or is advertised as a number one agent, sometimes you might deal with their assistant and you may not see the realtor. So interview realtors like you would interview anyone else for a job. You're going to be employing them to find you what you're looking for and help you get from non-homeowner to homeowner, and at the end of the day, give you keys to your new home. Now you've found the perfect home and it's time to write an offer. Now in writing an offer in Texas, contracts are different than other states. And in Texas, you're going to have what's called an option period. And that option period gives you a certain number of days, which is negotiable, to actually do inspections on the property and to do all of your due diligence. You're also going to have contingencies in place for your financing. You're going to have a certain period of time to make sure the bank has run all the numbers, done an appraisal, and make sure that that loan, that money for the loan is actually coming to you on the day that we close escrow. Of course, there's going to be a closing date, and there's a lot of stipulations in the contract that protect you and help you do what's right for you, your family, and your money. So in writing the contract, make sure you take your time and you understand all of these different options. Now, one point to remember that here in Texas, real estate contracts are bilateral, and that means you as a buyer are promising to pay a certain amount of money for the property, and the seller is promising to deliver title or ownership to you without any clouds of title or any encumbrances. Now, this is all handled through the title process and what we call the closing process. Now, speaking of the closing process, you will have what's called closing costs. So your lender's going to have a fee for producing the loan. The title company is going to have a fee to ensure that it is conveying clear title to you from the seller. And there's going to be some additional costs besides your down payment to purchase this property. So make sure when you're buying your property that you understand all of these costs so that you're not in the 11th hour worried about, I need extra money, or, hey, I can't close this transaction because I don't have the money. And then you're in a situation where your bilateral contract, you haven't fulfilled what you promised to do, which was buy the home at a certain price. Okay, so now it's closing day. We've been through all of the contingencies and it's time for you to get keys to your home. Now, on this day, normally if you're local, you're going to go right to the title company. You're going to meet your agent there and you're going to sit with the title rep who's also a notary, and they're going to go through all of your documentation, your mortgage note, the deed, everything that's transferring with you. You're going to sign a ton of papers. So plan on being at the title company for an hour, hour and a half. At the end of signing everything, they're going to reach out to your bank and your lender and say, wire the funds over so this person can now own the home. Now, added to this, you as the buyer, if there's any funds left over that you have to send to the title company, for example, the rest of your down payment money because you just left a small deposit, that all has to be wired all at the same time. Now, once all of that is done, congratulations, you are now officially a homeowner and you're going to get keys to your new home. Now, some buyers have a moving truck in the parking lot and they're excited and they get moving right away, where others take a slightly different approach. Now, that's totally up to you and your personality. Listen, if you have any questions about this process or you'd like to talk to me about what you're trying to do, feel free to leave a comment below or reach out to me direct. My contact information is in the description. And if you'd like to stay current on everything real estate, hit subscribe and the bell, and you'll be alerted every time I upload another video. Thanks again for watching, and we'll see you next time.